Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Mishra. Well, talk about Indian equities set to scale record highs on penultimate session of FNO expiry, on the way perhaps to clock the fifth or fourth consecutive session of gains coming in for Dalal Street. Gift Nifty suggests a positive start, at least about the 21,500 mark, up with modest gains to an extent of 0.2%. Talk about Wall Street, it ended in higher in the final stretch of 2023. Rate cuts, of course, are in view, but the expectation that Federal Reserve will begin cutting interest rates as soon as March essentially has buoyed in the sentiment. Talk about Asian shares, well, they've risen with the year-end cheer tracking Wall Street rally. They've also been tracking, investors are latching on to the year-end optimism driven by expectation that Fed could begin cutting rates as early as March, of course. FIIs, net sellers, but the amount is minuscule there, 95 odd crore, nothing much to read on to. DIIs have bought equities to an extent of 167 odd crore. What we have in terms of FNOQs, well, if you talk about the FII data, they've been the net sellers in index futures. However, they've been the buyers in index option. Along with that, they've also been buyers in Bank Nifty options. So that's something that you need to watch out for. In terms of index Qs, what we also have is what is in the ban, right? New in the ban is RBL Bank. What still remains in the ban is National Aluminium Company, Balrampur Chini, Delta Corp, Hindustan Copper. What comes out of the ban is Ashok Leyland, India Cements and SAIL. But that's all that we have in terms of the setup. But do remember, it's the penultimate session of the FNO expiry. We saw some amount of intraday recovery that took place in the yesterday's session, led by banking and IT stocks. On back of that, some amount of momentum, of course, is expected in today's session too. But how will that play out? Let's actually find the answer from Ajit Mishra, SVP-Technical Research at Religare Broking. Morning there.
Good morning, Nikki.
Straight up to you, Ajit, what do you make out of the start, immediate support and resistance levels for Nifty and Bank Nifty?
So, Nikki, we are seeing the fourth successive session of recovery. Recovery in sense that last week in the middle, we saw that index slipped sharply lower from the record highs. And the last three sessions, we have covered most of the damage. But now we have reached closer to the immediate resistance area, that is around 21,500 levels. So, being the monthly expiry also around the corner, we expect this level to hold. So, the initial uptick in case if we see, we doubt that's likely to sustain. So, the higher end, close to around 21,525 to 21,600 zone is likely to act as a strong resistance area. So, in case if you are holding long position, at least in the index, one should look for booking profits around those areas. And wait for an dip around, let's say, 21,390, 340 zone to re-enter. Banking, we feel that...
Ajit, just give me a second. Let me address in the market open. And we're going to come back to you. We got your strategy on Nifty 50. We're going to come back to you. And Hero Motor Corp, Sun Pharma and HDFC Bank. Along with that, Apollo Hospitals also is one of the top losers. But Ajit, I'm going to come back to you and ask you your strategy on Bank Nifty now. And what do you make out of the current stance?
So banking also is largely trading in tandem, but of late you started seeing a mixed trend within the private banking space, which is capping the momentum as of now. So we feel that until we decisively reclaim 48,000 mark, this consolidation might continue with 47,300, 350 being the lower end and 48,000 being the upper end. So within the banking space, we feel that private banking measures should be preferred. So stock like Kotak, wherein we are seeing consistent buying interest, then we have seen decent profit taking from the record highs in ICICI and Excel. So that can also be considered.
Okay, those are some of the stocks that you can consider. Of course, Ajit, I'd want to chat with you about HDFC Bank essentially. That's one counter perhaps which is one of the top losers after the run-up that we've seen. What do you make out of an HDFC Bank? Essentially, it seems like a very silent candidate of a re-rating potential out there, but that's of course on the fundamental side. What does the technical chart suggest?
So exactly, it means since 2021, we have hardly seen any meaningful gains in the stock. It's been hovering in the broader range, 1250 to 1680, 1700 on the higher side. So we are trading closer to the upper band of the same. And the way we are seeing that buying interest emerging in the private banking majors and specifically from the FI desk as well, we expect these levels to hold, and finally we may see the breakout in the coming weeks. So from the very short term perspective, we feel that's a normal breather that the stock has been taking as of now, because we have hardly seen any price wise correction in the last 3-4 trading sessions. So it's definitely a positive pattern that's been forming. And as a trader, I feel that until we break 1660, one should continue to look for accumulation in the stock, and the immediate target could be close around 1710 to 1740.
That's the range perhaps that you need to watch out for. HDFC Bank right now, perhaps a bit of profit booking there, but also there are a couple of listings there. Ajit, your top recommendation for the day, if any?
Yes, so both the recommendations are on the buy side, considering the market tone, and both are index majors. So Asian Paints, basically the first name on the list, a consistent performer within the paint space. And after spending nearly 2 years under a broader consolidation range, we are finally seeing meaningful buying interest. The stock has been inching towards the upper band and is likely to witness a breakout also soon. So from the very short term perspective, we feel that 3480 is something that we are eyeing as a target. So traders can accumulate around the current levels with 3330 as a stop. And the other name is from the defensive space, Cipla. So the entire pharma space is buzzing, and Cipla, it has formed a very strong base around record high, and we have already seen a move in the other pharma majors, and we expect Cipla to also resume the trend. So 1290 is what we are eyeing in the near future. So with stop at 1220, one can buy Cipla also at the current levels.
We're just going to leave it at that. Thank you so much for taking out the time and having this conversation with us. I'm going to quickly address the stocks and news. That's all that we have in this edition. With this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.